Hi, my name's Serin, and I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us here on Friday, October 15th for another market recap. I am joined today by my guest co-host, Jordan Youl. I always enjoy it when you join me, Jordan. Thank you for joining us today.
Yeah, thanks for having me. It's good to be here.
Of course, Jordan is with StoneCastle Investment Management and joins us whenever Bruce is unable to, and you're always a welcomed addition to our show. There's lots that we're going to talk about today. We're going to break it all down. We're going to talk about a new commodity super cycle. You're going to tell us what that is and what that means. We're going to talk about some small cap leadership that we're seeing as opposed to the big guys. We're going to talk about Bitcoin. It went over 60,000 US dollars this week. And we talked about this last time, I think you were here, about the famed golden cross that occurred and why we're seeing that happen. We're going to talk about NFT trading, non-fungible tokens. The volume has exploded and some developments happening there. And then, of course, we'll get into some CSE issuer news. So let's start off with the new commodity super cycle. What's going on?
Yeah, this week in particular, especially in the TSX being a short week with Thanksgiving, equity markets are hitting all-time highs, which is fantastic. We continue to see a lot of cross currents from a market cap and sector leadership perspective, which we'll touch on momentarily. But the big moves week over week has been in commodities. Base metals have performed pretty well for the better part of this year. We've seen the pullback in precious metals in Q2 and Q3, but we are starting to see that reacceleration again with signs of upward inflationary pressure and other variables. But we are starting to see more commodities starting to hit the tape here. So that's definitely been the key drivers week over week. And case in point, if you take a look at the TSX venture exchange on a comparative basis to the TSX, it's really outperformed and broken out. So definitely that bodes well for commodity investors. But looking at commodities long term, we do have a long-term chart of the S&P GSCI Commodity Index, and it's compared against the Dow Jones Global Index, which tracks a basket of global equity markets. And this is a long-term chart that goes back to the mid-90s. And the takeaway here is that the current market environment today is showing similar characteristics to what we experienced in the late 90s, early 2000s. So when the ratio or the price in this chart is rising, that is telling us that equities or commodities, are exhibiting stronger positive momentum on a comparative basis to equities. So the ratio is definitely rising, but what's also constructive and encouraging is that in the lower panel of that chart, the momentum oscillator is on the cusp of turning positive for the first time since 2000. Now, not only is the price or the ratio rising, but the underlying momentum is very positive and constructive and about to turn positive. So that definitely bodes well for the TSX and other commodity equity regions.
Do we typically see commodities do well when there is inflation scares?
We do, yeah, and there's obviously a lot of inflationary pressures, and next week with the CPI indices releasing their most recent data, and with the Fed and whatnot, there's a lot of noise on inflation. We're seeing that with the supply chain pressures as well. But yeah, these cycles typically last for decades, and despite in this example where commodities outrank equities on a relative basis, there are equity regions like Canada. We've seen Saudi Arabia and Russia and Poland and other regions that are commodity rich. They're thriving in this type of environment. And looking back at that chart, from 1999 to the peak in 2007, the TSX generated phenomenal returns over that time period, where the S&P was pretty much flat over that same time period. So we might be seeing a changing of a guard in terms of leadership, where the TSX has really lagged and underperformed the S&P over the last decade. We might see the TSX outperform the S&P moving forward.
Amazing. Okay, small caps. I love talking small caps. They're doing pretty well right now. What's happening?
They are, yeah. And you and I throughout this year, we've talked about small caps really driving the markets off the March low of last year. We had some follow through into Q1, but as you and I meant or discussed, over Q2 and Q3, we started to see a shift favoring the defensive sectors and predominantly the large caps. So the leaders of 2020 were really underperforming the last couple of quarters. But what's changed over the last few weeks is we're starting to see, market breadth improve, and that's been a concern, or, the result of the small to mid caps really lagging and underperforming the indices. But we are starting to see those breakouts. So we do have a chart, and it's a ratio of the TSX small cap index compared to the TSX 60. And this is a momentum oscillator. And the takeaway here is that when the histogram is above the zero line, that is indicating that the small caps have stronger price momentum compared to the large caps. So if you go back to, COVID, in March of 2020, that histogram was making higher lows, and it inevitably turned positive in May. And you can see it stayed above that zero line for several months until Q1 of this year. But the takeaway here on the right-hand side of that chart is that histogram turned positive a few weeks ago. So for new ideas, or what's really going to be driving the market moving forward, is the small to mid caps. So from a sentiment perspective, this is definitely positive for equity investors. We want the small to mid caps to participate as the markets are hitting all-time highs. And then in addition to that, we also have a seasonality effect. And we touched on this back in September, but historically Q4, November and December in particular, the small caps generate very strong returns.
Very cool. Well, that's always great for issuers on the CSE, that's for sure. Okay, we're going to talk about Bitcoin. So Bitcoin, keep in mind, this is 60,000 US. I did look right before the show. It was $61,545 US, which is over 70,000 Canadian. I don't know the exact number, but you talked to us last time you were here about a golden cross. Remind us what a golden cross is.
Yeah, it's a widely followed two moving averages, effectively. It's a 50-day moving average and a 200-day moving average. And the golden cross is widely followed by investors to identify the trend and the strength of that trend. And when the 50-day moving average crosses above the 200-day moving average, it's defined as the golden cross or bullish, right? So when we spoke last time back in September or August, we just had experienced a golden cross on that day. And the price of Bitcoin was around 47,000 US at that time. And as you mentioned, it hit 61,000 today. So it doesn't happen very often. They typically lag, but it also provides confirmation that the underlying trend is higher. And, that trend is still intact. And, we're seeing more demand and appetite for the cryptocurrencies.
Absolutely. So on that note, we're going to dive into a little bit. I mean, I don't know if this is reflective of what's currently going on, but it is said that there is the potential next week that the SEC will approve the first Bitcoin futures ETF. So I'm just going to break down what this is first, and then you're going to tell us what you think about this. So first of all, an ETF is an exchange traded fund. So most people understand mutual funds. Mutual funds are a pool of stocks. They are bought and sold throughout the day, and then the fund is rebalanced at the end of the day based on closing prices or based on what activity occurred. So the value of your mutual fund is set at the end of every trading day. An exchange traded fund is a pool of funds, but it trades itself on the exchange during trading hours. So you can buy and sell it on the stock exchange. Now, a Bitcoin futures ETF, to break it down a little bit further, is based on futures contracts of Bitcoin. Now, a futures contract is a contractual agreement to buy or sell Bitcoin at a future date at a future price, no matter what it trades for that day. So if you agree to buy it for 60,000 today and it's 61,000, you get to buy it for 60,000 no matter what. So that is what a futures is. So this would be a Bitcoin futures ETF. So it's not been fully decided yet, but the SEC down in the US will be making a decision next week. So tell us what you think about this.
Well, it's definitely creating a lot of interest and appetite. It's going to create a tremendous opportunity for retail investors in terms of accessibility. It's also going to provide diversification in the context of a portfolio level. Liquidity will be a benefit as well. So like you said, it trades like a stock, so you can get in and out as you see fit. And it's also going to attract institutional investors as well. So it's definitely a win-win, but leading up to this announcement, and I believe it could start trading next week, maybe Thursday, there's a lot of hype and demand, and it's going to create a tremendous opportunity for investors that want exposure to this alternative asset class. Now, domestically here in Canada, we've already been experiencing this, right? And it's been super successful. Purpose Investments, in particular, an asset management firm out of Toronto, has an ETF version as well. And there's well over $1 billion in assets under management in that product. So we've experienced it already here, and it's been tremendously successful. So I can't see it being any different south of the border.
Absolutely. Okay, that is a good segue into what we're going to talk about next, which is actually NFTs. But before we get into NFTs, I want to talk about a company called Coinbase. They are based on the NASDAQ down in the US. And they did something interesting this week on NFTs we're going to talk about. But before I get into that, Coinbase actually went, they filed a letter with the US Congress. They have asked Congress to create a special regulator to oversee the crypto market. So this I thought was really interesting. They suggest that they have an individual entity, so not the SEC, and I believe there's one other regulator down in the US, that would regulate trading, transfer, custody, clearing, settlement, money payment, staking, borrowing, and lending. So create kind of a separate entity completely to regulate the crypto market. I wanted to ask you what you thought of this, and also wondered if you think this is something we might see proposed in Canada.
I think so. Yeah, it's definitely in the best interest of investors to have it self-regulated, right? Obviously with the illicit market and whatnot, it definitely having a uniform regulatory body is definitely positive for investors for sure.
Absolutely. Well, it'll be interesting to see what happens there. Okay, so talking about Coinbase, which is a very large crypto company on the NASDAQ, I think it trades at $275, somewhere around there. I can't remember the last price. They've come out to diversify their revenue streams, and they want to create a marketplace for minting, buying, and discovering NFTs using an Ethereum-based platform. This is on the cusp of NFTs. The third quarter came out, the volume topped $10 billion. What do you think about this?
Yeah, I think it's excellent. And as you mentioned, they're looking to diversify their revenue stream. It's been pretty one-dimensional, and I think that's what the street has an issue with. So the fact that they're rolling out their own NFT platform is going to increase their income and revenue from different sources.
Do you think this is just a opinion question I have for you? There's so much coming to market, and there's so many new regulations that we have to take a look at it, and investors have to understand so much about whether the crypto space is quite speculative, NFTs, the non-fungible token space. Do you think this is all happening a little fast for us to all catch up, or is this just what happens when we have big movements like this in emerging sectors?
Like we discussed in September, this reminds me of the cannabis sector. It's just firing on all cylinders. And, with NFTs in particular, the content is always going to be different, right? So, whether it's gaming or sports memorabilia, songs, like Lindsay Lohan, we talked about her back in January about launching her own version. So, this is definitely, a runaway train that has a tremendous amount of growth. But, what's really evolved over the last decade or so in particular, whether it's ETFs or alternative asset classes, there's a lot of innovation. And, this trend is going to continue to grow and expand. And we've really seen that based on the volume growth quarter over quarter.
Jordan, I love any market recap where we talk about Lilo. Okay, we're going to get into some CSE issuer news. This week, we're going to talk about a new issuer that is set to commence trading on Monday, October 18th. It is Zebra Brands. They are going to commence trading on the CSE. So welcome, Zebra. We're happy to have you guys here. The reason that I wanted to bring these guys up, other than welcoming them to the exchange, is they have a wholly owned subsidiary that is in a prime position to be one of the first legal cultivators in Mexico when it or should it go legalized. They are involved in 150 different cultivators, 6 infused beverage brands, trademarks in over 40 countries. They're active in the Netherlands, in Colombia, in Canada, and now in Mexico. And so it'll be really interesting to see this company. But the reason I especially want to talk about it is, Mexico, should it legalize? We haven't talked about Mexico in a little while. Mexico, should it legalize, and they've had difficulty getting there, it's been a long road for them, will be the largest legal recreational market in the world. Do you think we're going to start seeing a lot more companies come to market that are involved in the space down there?
Yes, without question. And you made a lot of great points there on the company, but from a geographic perspective, obviously with the free trade agreement and let's say optimal growing conditions as well down there and cheap labor costs, there's a lot of advantages as to why a company would want to be based in Mexico for sure.
So on that note, before we talk about next week, I do want to mention, because we've been so busy over the past years building amazing content online. If you go to CSE TV, we did a cannabis investor series earlier this year, and we did a whole segment on cannabis in Mexico. So if you're interested in learning more about it, definitely go check it out. Also, I wanted to talk, because we talked about NFTs. Just last week, we completed digital securities in the capital markets, and there was some great discussions on NFTs. In particular, we did a panel on them. So if you want to learn more about that, definitely go check it out on CSE TV. Okay, Jordan, what should we think about going into next week?
Yeah, so a lot of companies are going to be reporting. We're in earnings season. But what we're watching closely is the US LEI index, and they report next week as well. It hit all-time highs, and really what we get from that is the economic backdrop. Is a recession imminent, or what are the conditions telling us? And it did hit an all-time high last month, so we're not overly concerned with that. Obviously, inflation has been top of mind for a lot of investors, and that kind of coincides with the commodity theme. So as a result, we're going to keep our eye on the US dollar, which had been strong up until the last couple of days. So there's a lot of cross currents between asset classes, but we're definitely more constructive and positive in the commodity space moving forward, longer term. And then from an equity perspective, we are liking what we're seeing in the small to mid cap space, and that coincides with improving market breadth. So as the equity markets are hitting all-time highs, we're starting to see more issuers down market cap participate, and as equity investors, we want that.
That's awesome. Well, listen, you have a wonderful weekend. I always enjoy having you here as my guest host, so thank you so much, Jordan, for filling in, and hopefully we'll see you sooner than later.
Thanks for having me.